Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. It is going to be a big day today, ladies and gentlemen, and depending on when you're watching this video, the CPI for the US would have already been out or still yet to come out. These videos come out at 1 p.m. UK time. The CPI print will come out half an hour after its release. And what the CPI gives us today is very much going to set the tone for markets. You can see markets are very sort of still in the run-up into the CPI. I personally am not a fan of trading CPI. I just find that it's one of those days that you're either very right or very wrong, and you're literally relying on US government released data to determine that. And I find that the market is very skittish. It's a nightmare to position into these kind of days. We do have the dollar selling off this morning. We have Bitcoin somewhat still after having a very shaky day yesterday with BUSD. We had the Asian markets. I think they were up just marginally at around about half a point. And then we have the futures market, which is up for now. But that can change very, very rapidly depending on what kind of a print it is we get. And markets and risk is going to look for a lower CPI print than the prior one that we had, which was 6.5. Let's take a look at some of the estimates. It's funny, Gagavin, by the way, great account to follow. He often posts this and he sneaks in his Gagavin Capital. And a lot of people that just sort of copy and paste this for sort of content farming don't actually realize that he's done that. So you can usually tell who's copied his tweet. There's no point in copying it, guys. Just get it from the source. This is CPI estimates for tomorrow. Bank of America 6.1, Scotty Bank is 6.1, Barclays 6.2, Credit Suisse 6.2, JP Morgan, which are usually more spot on than not, is 6.2. Obviously, he reckons 6.2. Got Wells Fargo at 6.2, Visa 6.3, Goldman Sachs is coming in at 6.4, Morgan Stanley 6.4, and SMBC Nikko 6.7. So the consensus is around about 6.2. I think that's a good result for markets. I think there are areas where inflation, and anybody that's interested in joining my Patreon, it's well worth it. On Sunday, we did a review of the individual components that make up the CPI to try and sort of determine what we thought it would be. And it's quite murky. It's quite sort of, it's not really giving you that much, the basket of things that make it up. They're kind of very much where they started January off. You know, if you look at January as a year, a lot of things didn't really move that much. It was marginal, and there were certain spikes in certain areas, but declines in others. So we'll just see what happens. And whatever happens, you know, providing we don't get 6.5 or over, markets, I think, will appreciate that. I think you've got to remember that why are we looking at inflation data as a crypto investor, and why is it so important? Well, we've known that the macro, it's become a kind of household name now in crypto, is and has always been important. And actually, you know, you can see that inflation is what's driving rates, rate estimates, which is what's driving market pricing. So it's very important today. Inflation report due Tuesday has potential to deliver some bad news. All markets eye Tuesday will be on the release of the Labour Department Consumer Price Index, a widely followed inflation gauge. Economists are expecting the CPI will show a 0.4 increase in January, which would translate into 6.2 annual growth, so 6.2 CPI. However, there are some indications that the numbers could be even heavier. The Fed is determined to keep fighting inflation, so the report could harden their position. So this is the thing. They've also got an extremely strong labour market, so they have all the sort of backdrop to do that. It's going to be interesting. I just want to get it over and done with these events because then I can position on the back end of it. You know, I've kind of been racking my brains. At the end of the day, guys, I'm very much in the buy the dip camp. You know, we've given all these scenarios that we've looked at. And I think that we've had a very healthy, is what I would call it, not scary or horrific. You got to remember, you know, Binance's BUSD getting, or I should say, Paxos' BUSD getting sort of told that they need to stop what they're doing. I think under a bearish market or a market that was weak would have caused a lot more sell pressure than what we saw. So I can't help but feel, you know, and I do have a bias in this. At the end of the day, we accumulated on the 5th of January, which was down in this region here. All the proofs in the pudding. You're welcome to join my Patreon to find that out. And I am looking to accumulate more crypto. But it's hard to sort of position going into an event that is just, super, super hit or miss. So what happens here, I don't know. Then you get your third leg, maybe. Maybe we do something like this. Not sure why I've put a bunch of these together. Maybe something like this happens. Now, I'm not really an Elliott Wave trader, but you could see something like that taking place, potentially, depending on what's going on. I'm not actually necessarily calling for this, but we'll see what happens. So it's going to be interesting, guys. I'm looking forward to whatever kind of reveal we get, and ultimately, that's going to give me the confidence to position in the manner. But the majority of estimates are coming in lower. Again, this is going to drive everything. We had some interesting things from Wells Fargo this morning. They said we're out of a bear market, but it doesn't mean that we're straight into a bull. And this is one thing that we've actually said. We've said, okay, we might be coming to the end of the bear, but you're not in a bull market until you do certain things. And that, of course, is what we've just drawn for you here. A bear market for me is a kind of more broader term, and you're in, this kind of downtrending environment with lower lows and lower highs. You don't become out of that until you do something like this, and go in and put in a lower high, a higher low, and a higher high. And then you can sort of say, okay, well, you've now shifted. So we've looked at lots of things that may suggest this is on the horizon, but until it happens, it is speculation. But we are long, essentially, from a spot position for the first time since up here, ladies and gentlemen. What else do I have for you? So Wells Fargo have been saying a number of things. They're also saying the Fed is not your friend. Wells Fargo deliver warning ahead of key inflation report. You think about history over the last 15 years. Whenever there was weakness, the Fed rides to the rescue. Not this time. Fed cares about inflation, and that's just about it. The firm's head of macro strategy, CNBC's fast money on Monday. So the idea of lots of easing, forget it. Yeah, so I think we have a lot higher or stricter conditions for markets to rally into than we've previously had. We don't have this stimulus package. It's why actually it's one thing that led us to really think there was pain coming last year, because if you think about Bitcoin, it's never had to endure a tightening cycle, which is essentially what we're in. There's a number of different things going on. Wells Fargo also, by the way, guys, and this is well worth, I'll leave a link to this in the description. Digital Assets, a World of Possibilities. They published this last year, sort of mid last year. Great read. Talks about how they really do believe that blockchain is as revolutionary. We believe digital assets are a transformative innovation on par with the internet, cars, and electricity. Just sort of throw that in there. And of course, I did cover this in yesterday's video where we look at the fact that regulations are actually part of this space gaining mass adoption. And there's actually a very bullish undertone to everything going on right now. And this is how Bitcoin decouples from, and crypto decouples from the sort of stock market, is it gets its own sort of space and appreciates in the same manner or in a different manner to what stocks may do, which are just driven from this pool of liquidity. You might have this sort of huge liquidity increase due to regulatory clarity, which will allow institutional players that are chomping at the bit to get in to actually have that confirmation to do so. So it's going to be interesting. I didn't want to make this a long video. I have to go and sort of prepare myself for what's coming. Yeah, we will see, guys. At the end of the day, this is going to be very revealing. Stock market doesn't look too bad at all, actually, looking at it whatsoever. It does look like you may want to push. And the thing is, if you push out of this, just like with your altcoins, I've got to put the draw on here, take the draw off here. They all ran into key levels, right? And they pulled back from it, and you're potentially looking to coil up out of it. This is what we're looking at, guys. You've had this pullback. You may get that rise to the upside. Can you see how it does this? But it's all going to depend today, really, on the CPI, which is why I'd love to just get it over and bloody done with. But still very much set on this being a healthy pullback in what could be the start of continuation. And again, if you do get that confirmation that we're going to continue to go up, you've just set up a head and shoulders on a larger time frame, which is a reversal structure to sort of couple in with all the other reversal indicators that we've been looking at. And certainly if the CPI comes out well and you do something like this, you've got that beautiful weak right shoulder that's going to set you up for these upside targets. All I've got for you in this video, guys. If you've enjoyed the content, a like is always appreciated. So is a comment, and I look forward to seeing you all in the next YouTube video. Have a wonderful Tuesday, guys. See you in the next one.